Well, over the past 2 years, the giant miner Rio Tinto has dug itself out of an almighty hole, and this week it repaid the investors who tipped in $15 billion to rescue it not so long ago. With its debt now almost wiped out and soaring commodity prices and demand delivering a record $14 billion profit, Rio Tinto is now back in growth mode. I spoke to Rio's chief, Tom Albanese, in London about his plans. Well, Tom Albanese, you've announced a big increase in profit, an even bigger increase in dividend and a share buyback, $5 billion, but the stock price went down. The market seemed to be underwhelmed. So did you wonder what you've got to do to get the stock price to go up?
Not really. I mean, if you have to look over a longer period of time, certainly I think there was a bit of buy into the rumors, sell into the news. We had a very strong week of performance. And I think we have sort of softness in the broader market right now. So I think as I've been meeting with people, meeting with shareholders, meeting with analysts, I think many have come to me saying, boy, we weren't expecting capital return. We're pleasantly surprised.
Well, in fact, your balance sheet's very strong. Your gearing is going to be left at around about the same level. Is that correct?
Well, I think from our perspective, we've talked about pretty good set of current economic conditions. I think GDP at 4 to 5% this year, higher than we would have expected. Good long-term picture, but there's enough uncertainty out there. There's enough risk of volatility out there. Most people I've been talking to saying it's not a bad time to keep a strong balance sheet.
How do you feel about the balance of your portfolio overall now? I mean, obviously you had a big go at aluminium a couple of years ago. Didn't really work out. But now 2/3 of your profits come from iron ore. Do you feel overweight in iron ore?
Well, I think, first of all, on aluminum, it's been challenging over the past couple of years, but a $1.3 billion year-on-year improvement in profits in aluminum certainly was helpful in terms of our overall 2010 performance. We've had very strong iron ore pricing, and actually we've had record production. So we've had a very good year in the iron ore business. But we shouldn't forget about the important contribution we've seen from copper, from coal, and the other parts of the business. And that's been really the beauty of a diversified model, is that some years, again, frankly, some metals are doing really well, but others might not be doing so well. I don't think that too many people accurately can predict 10 years ahead which are the strong ones and which aren't the strong ones. But having a diversified portfolio of first-tier assets in each of the sectors we're in, I think, is a really good strategy.
Yes, but you're nowhere near as diversified as you used to be. I mean, some of the analysts I've spoken to talk about you as a pure-play iron ore company.
Well, I think, again, this has been a very good year for the iron ore business, but we do make profits in the other parts of the business. I'd like to continue to grow the iron ore business, particularly the Pilbara. It's such an important part of Rio Tinto, but also an important part of the Australian economy that we want to see it continue to grow. But certainly, if we could find the right opportunities in other parts of the business, I really want to push them too.
Well, just looking at iron ore, the iron ore price obviously is at a historic high, which is why you're making so much money. What's your outlook for that?
I'd say that iron ore pricing today is higher than I would have anticipated, say, 12 months ago. We have seen volatility. Even over the past 12 months, we've seen quite a bit of volatility. So we shouldn't preclude that volatility from taking place as we go forward. Realistically, if we look over the next year or two, it's hard to find sort of big new areas of supply globally, particularly in 2011. But as 2013, 2014, 2015 start winding in, you're going to see a lot of new iron ore coming in the market, and it's probably going to put the market closer in balance than we would see right now. I mean, right now, as we speak today, the conditions are very tight with certainly a demand that's continuing to be well in excess of what the supply is.
What do you think is the long-term equilibrium price for iron ore?
That's at least a $64 million question. I think in general we would say that the markets, when they come into equilibrium, will lead to some softness in those markets longer term. We certainly invest on that basis. I think anyone that's investing on the basis of today's prices are likely to be disappointed down the road. The question really will be over the next, say, 5 years, the next 10 years, what will be the global steel demand and how will that translate into iron ore production. But I think realistically we can expect a reversion from current levels.
But you are quite confident about the copper price, according to your statements this week. Are you the most optimistic about copper, do you think?
10 years ago, if you were to ask anyone in the mineral sector what were the metals you were most pessimistic about, 10 years ago, people were the most pessimistic uniformly about iron ore, coking coal, and copper. Look at how things have changed over a 10-year period of time. So while I would say today I'm quite optimistic about copper at some point in time, the higher copper prices stay for a longer period of time, the more new supply will be induced. That's just the nature of markets, the nature of supply and demand. So I think we will see a continued period of strong copper pricing, largely because many of the large mines, including our own, are seeing declining grades, deepening pits. But you will see new mines like our own in Oyu Tolgoi, Mongolia. We're working on several new projects around the world. And I know certainly our competitors are working on their own projects. So we will see new copper supply coming in, and that will begin again balancing out with demand.
Well, in that case, I mean, Oyu Tolgoi looks like the best prospect in copper. Why not just buy the rest of it instead of arguing with your partner, Ivanhoe? Why not just buy them?
Well, again, in Ivanhoe, we did come to an agreement with Ivanhoe in December, which basically we provided Ivanhoe with a pathway on financing, and Ivanhoe has given us essentially the management of the construction, but also the operations of the business. So I think we've each sort of settled differences. We've attained objectives. We have a pathway to 49% on the project, and again, we, working side by side with Ivanhoe, will work to bring Oyu Tolgoi into production. And again, what I want to do there is, again, bring them to production. We want to manage that, but again, we want to do so in a way which also delivers value to Rio Tinto shareholders.
Yes, but what I'm asking is whether, given your optimism about copper, 49% of that is enough.
I think, again, we will look at it on a value basis, and I'd say that given where we are right now, the arrangement and the agreement we made with Ivanhoe in December gives us a pathway to build the mine and to operate the mine, and that, again, meets our needs. I think it probably meets Ivanhoe's needs.
Well, in general, where would you like to see Rio Tinto's portfolio expand? You've obviously got your bid for Riversdale, which is the metallurgical coal business in Mozambique, but what else would you like to do?
Well, I think, first of all, of the $12 billion or so that we've of new approvals that we've announced over the past 12 months, $9 billion of those have been in Australia. And of that $9 billion, $8 billion was just in the Pilbara. So 2/3 of the investments that we've announced and decisions we've made over the past year have been associated with the Pilbara. So I'd say expanding our Pilbara operations by over 50% over the next 5 years would be my number one growth priority. Probably the second priority, as you've already referred to, would be bringing up the copper business. I think Oyu Tolgoi is a part of it, but again, I think we have additional opportunities in South America and North America that I also want to pursue. And in New South Wales, I think looking at opportunities which we're working on now to expand and extend the life of North Parks, I see as an important part of it, but probably not as important as some of our other big copper projects. I think on coal, I would like to see opportunities to build upon our New South Wales and Queensland operations, but I see opportunities to supplement that, again, if the right conditions all take place, with possibility of a coking coal opportunity in Mozambique, which is the Riversdale bid, which we've extended that bid this week till about early March. I think I'd like to look at uranium, I'd like to look at diamonds, but I'd say on balance, I think we have a pretty good portfolio in virtually all of our businesses where we can be expanding those businesses.
Well, so are there any products that you're not in that you'd like to get into? I mean, I'm thinking about potash, which BHP bid for that big Canadian potash business but underpaid, failed. But what about you?
Certainly, we've been in potash ourselves. I was the one that got us into the Argentinian potash in 2001, 2002. By the way, that was right in the middle of the Argentinian financial crisis, so it's important to recognize that these economies can sort of can go through different phases as they go through. So I do like potash. We did sell the Argentinian asset during the financial crisis, but I've told our geologists, if we find the right opportunity, let's get into it. But frankly, on potash and many of the new things, I'd rather look at them from more of an exploration perspective, find some new resource, and look at developing on a greenfield basis. I'd say on the sort of the M&A space, in terms of as I scan the landscape, I'd be more narrowly focused on the smaller type things that really would be more of a bolt-on to the existing businesses of Rio Tinto. I think we can certainly satisfy our growth objectives by focusing, first and foremost, on organic opportunities within the existing suite of Rio Tinto businesses.
So no big takeovers?
No, I think we'll focus on, again, the smaller ones, that could be bolted on or complement existing businesses. If we have them, great. If we don't have them, fine. We'll just keep working on our existing Rio Tinto businesses.
Thanks very much for joining us, Tom Albanese.
Good to talk to you, too.